The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 5, Nasdaq's up 19, S&P's up 4. Fed day.
Fed day.
Here we go.
2 p.m.
2 p.m.
4 hours from right now. We'll find out.
Gold contract flat, $1,300 an ounce. We have silver up 7 cents, $16.97 an ounce. Light sweet crude down 37 cents. EIA numbers, 1030.
A lot going on today, man.
I like
sure.
it. I like it. Notes and bonds, bottom line, they won't move, folks. You get the 10-year note flat, a 119.12, 30-year bond up 3 ticks, 143. They will move at 2 o'clock.
Oh boy, 2 o'clock, 2:30, right?
Yeah,
the whole afternoon,
exactly.
I imagine, for sure.
King dollar down 101 ticks, 93,700. You have the euro at 117.70 to 1 U.S. dollar. The yen is out here at 110.41 to 1 U.S. dollar. Bottom line is that this market's going to be rocking and rolling, particularly, I suspect, the currency market.
Definitely.
You know,
definitely
coming up to those numbers.
He's available. He's ready. Yeah.
Oh,
we got our man.
That's a beautiful thing.
I knew you were. I was like, what's going on, man? There we go. Let's go.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, if you haven't test-driven yet the Thinkorswim platform, it's an outstanding platform. Easiest way to do it, just go to TFNN. You'll see the banner on the top of the side. Hit the banner. Bring it up. They'll allow you to trade with paper money. And I do it right now because
today might be a good day.
Today's going to be a great day because you're going to be able to see these implied volatilities that more than likely are going to be pretty good, meaning high, coming into
what you're looking at.
Coming
I'm sure there's
depending,
many,
you know, what you're looking at, coming into that 2 o'clock time frame, and then you're going to see the crush. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. I am coming to you live from the TD Ameritrade corporate offices in Omaha, Nebraska.
Oh, that's awesome, man.
There we go.
Yeah.
That is a beautiful thing. So
beautiful, right in the middle of the country, Omaha, Nebraska. It's beautiful here.
What's the weather like today in Omaha, Nebraska, Kevin?
Oh, it's going to be warm. It's going to be 90 degrees. We got some nice weather coming through. We've got the College World Series starting here at the end of the week.
Oh, nice.
That's
really
always
cool. Fun. Good college sports. Got to love it, man.
Oh, big time, man.
Yeah.
Big time. So we get
we have basically this market digested the PPI number pretty easily, and now we're waiting for that 1 o'clock release of the Fed where, make no mistake, here's a spoiler alert, they're going to raise rates by a quarter.
Oh, breaking news right here on the program. Gotta love it.
Yeah.
You know,
now I want to hear the breaking news of what's happening at the press conference, Kevin. Let's hear it. Let's go.
I'll tell you.
I'm not so sure of.
Yeah.
You know,
we're all,
it's so intriguing, man, because it's like we know we have the European Central Bank tomorrow morning. It's like, is that going to be more important than the Fed? But the way that the NASDAQ and the NDX traded yesterday, it's like, man, they want higher price. So it's like, is this thing going to, it looks like, to me, right now, I suspect the statement's going to be dovish because I'm looking at that NDX, man, just wants to move higher, man. And it's like, okay, you know, you want, and if it would seem if it wants higher price, then, you know, these rates are not going to go up as quick as we may have thought they were going to go up, you know? So.
Well, Tom, here's the thing. Within 36 hours, right, there's 3 central banks that are meeting. The Fed, which we know what's going to happen there.
Yes.
Then you got the ECB, which that's where I think some of the volatility is.
Yeah, that's a wild card. Yeah.
Right. And then the Bank of Japan, which we know what they're going to do. They're full throttle QE.
Right.
Right. Their numbers keep disappointing. So the Bank of Japan has got their foot on the gas pedal. But Mario Draghi, who likes to make headlines, we'll see what he does. Is he going to mention slowing down or ending QE? If he does that, that could be the volatility that enters this market, and it could be in the form of that relationship between the U.S. dollar and the euro.
Yeah, no, that's the number. There's no doubt. Yeah. So we're gonna, you know, we'll know it too, because it's going to be really wild if the market itself knows what's going on right now and just flattens out, then it's going to be like, uh-oh. Then tomorrow morning is going to be the number, man.
Yeah.
So,
Right.
you know.
And then we get tomorrow. We'll wake up and we'll get numbers from the euro, and then we have our own retail sales. That's still a big number that this economy will pivot off of. And then, Tom, I think you're touched on to something here. When all this dust settles and all this news comes out, I think this market looks higher.
Yeah, this NDX, man, you know,
Right.
it was struggling to get over this March high, man, but it did it last night, and it looks to me it's spreading out right now. It's like, you know what, man, I don't want to hang at this old corner here at that high. I want to kind of get into a higher place. And so then we'll also see, you know, look at Netflix. You know, because Marbell won that deal last night, these media companies, man, Netflix is hitting a new all-time high.
It was interesting, though.
Well, if you're Netflix, and what is everyone going after, right? People that distribute content are going after content. Well, Netflix has a bunch of content.
Yeah.
Right? So there's probably a little takeover premium being built into Netflix based on that. Not that anyone will take them over. It'd be a pretty big price tag, but you can't rule it out.
Who's got $162 billion? They're for sale this morning, right now.
So, yeah, so the story is Disney and Comcast, right?
They're
Ryan Roberts
Fox,
and
for sure.
Yeah,
Fox
right,
getting the boost
right.
this morning, big time.
That's the long ball game in this whole baby.
Yeah.
Yeah.
Yeah, today, you know, yesterday's announcement really could be, you know, set up a chain of events in terms of people that were worried about their mergers being okay to now it looks like smooth sailing. So
Yeah.
this could trigger a bunch of deals.
No, I could absolutely see that because it's one of the hottest spaces. There's no doubt about that. I mean, you know, because what you definitely have, the change has been going on for a long period of time, but the change is here now. I mean, it's pretty dramatic.
Sure,
you know,
definitely.
People are bringing content right in their pocket, right?
Yeah. And I would kind of agree in terms of the competitive nature of it. There's a lot of competitors.
There is.
And as long as, you know, not to bring it back to the net neutrality, but I'm really for the net neutrality because if you have equal competition, there's a lot of competitors in terms of the content space and how it even get what is content. We're redefining what content is.
Yes.
In terms of people making 5-minute videos at home, they become that's your show, you know. And so there's a lot of competition as long as you can compete evenly on the internet. I don't see a problem with those types of acquisitions really hurting consumers when, just like I say, it's like, okay, you got Time Warner, well, you got Netflix, you know, well, you got YouTube, you know, you have some person sitting in their basement making videos on YouTube that they make their own show.
5 years from now, we'll see these big companies buying all those little guys.
Sure, right.
Yeah.
No, that's redefining what content is for sure.
Tommy, you are basically defining what this economy is turning into in many ways, which is direct to consumer.
Yeah,
Definitely.
That's the number.
Definitely.
That is the number.
If you're a middleman or if you have high margins, just assume your business is about to be attacked.
And it's for that reason, right?
Yes.
I mean, Twitch is enormous now because people sit and they make their own content, you know, and it's interesting content that people enjoy, too.
Yeah, it is. Folks, right here, 45 minutes from now, is going to be an awesome show, of course.
Talk about content, right? Swim lessons, right? TFNN, that's the same deal. Totally. Check it out.
Kevin, you have a great one, a safe one. Of course, have a great weekend, and we look forward to the show in 45 minutes.
Talk to him tomorrow, maybe. It's Wednesday.
Oh, sorry.
Yeah.
It's Wednesday.
The week is flying,
I'll see you.
Kevin.
We'll talk to you tomorrow.
I'll be here.
Okay, man. Stay right there, folks. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 2, Nasdaq's up 26, S&Ps are up 4.5. Let's go inside that NDX. So when we were just talking to Kevin, I just want to show you. So what you had happen yesterday, folks, is that the NDX was having trouble getting over the 175.21.
Okay.
You know,
it's a high of March 13th.
Yeah, we came into it last week. You failed on the daily, you failed on the weekly. That being said, it was really subtle yesterday. Yesterday, it just closes right above it. Like, you know what, man, this thing wants to go. Wants another leg. So this would be a good day if it actually does want a leg to get away from it.
Get a nice push.
Yeah.
Look at those Fox numbers.
Yeah. So Fox is up 7.7% this morning. That's up $3. They have two different Foxes, Fox A and Fox. You got Express Scripts. That's a medical health company. That's up 4.3. And Take-Two Interactive is up 3.3.
They a media company as well?
Yeah.
Yeah.
Well,
so maybe.
They're the video software game console company.
Okay, so not quite. I was wondering whether that was a Time Warner type. No, it's a different. Okay.
Taken away from the NDX 100, you have eBay's down 2.6%, Liberty's off 1.5%, Vodafone 1.3%.
Okay.
If we go into the Dow Industrials, taking a look at the strength versus the weakness. Disney
there you go.
Up 2.5%, Intel up 1.5%, Verizon that's the loser somehow. They're down 1.7%. Verizon's down 95 cents. We take a look at point wise because that's all that really matters.
Sure.
Oh, look at that. Doesn't make any sense. Hold it.
This is the raw points.
Oh, but I thought I was doing.
Yeah, I don't know how you jumped around there.
Yeah, I was doing the Dow, and I'm trying to figure out how the Netflix got inside the Dow.
Yeah.
There we go. Yeah. So you have Disney putting the most points in. Disney's putting 18 positive, United Health 10, Goldman 8, Johnson & Johnson 8, taken away from it, Caterpillar down 17, putting negative 17, Boeing negative 7.
So to tie it into that, Time Warner deal with the net neutrality, and it gets a little bit political, but this is something, we're TFNN, we're a media company, man. It's very personal to us, Without net neutrality, you could have the likes of even a TD Ameritrade, man. They could come in and they could say, we don't want TFNN to compete with us. We want our airwaves to be better. So that net neutrality is something that you want to be able to compete, especially for innovation, for growth. And I think that should be important to everybody so that you can have job creation, innovation, growth, smaller companies, I mean, in the likes of Facebook and MySpace, right? We might not have Facebook if MySpace, which was bought by Fox at one point, would have just created, greater bandwidth, greater access. Maybe Facebook wasn't a good experience.
With roadblocks.
Because it loads slow, so as long as you have that, I don't see a big problem with these merges because, like we talked about, anybody can create content. And that's what's important, that, you can be literally sitting in your living room, you can be TFNN, you can compete with the likes of CNBC, Bloomberg, across the board. So that's where I don't see consumers getting hurt. On the likes of a deal with AT&T Time Warner. I mean, there's a lot of competition like we talk about. I mean, it's everywhere.
It is amazing to me the different types of content that people enjoy. And
it's redefining content. I would love to see the arguments just on a legal basis of what the government was making as to how that was going to hurt consumers, because I'm intrigued as to how, in the face of the competition, how that was going to, and I'm sure there's arguments to be made of it, but in general.
Well, they lost big time.
That's what, they lost big time. I agree, exactly.
So, oil.
So it's Wednesday. We get the EIA numbers every Wednesday, 10:30 a.m. Eastern Time. We're going to jump over to the Nadex platform. We got the crude oil July futures contract up. We're trading almost to the penny, $66, okay? Now, we're going to start things off. So let's start it off on the lower end, as in lower, smallest time frame. These are expirations at 11 a.m. And what's nice is we're trading at literally within a penny of 66. And starting with the 11 a.m. expirations, we get the EIA numbers exactly 10:30. These 11 a.m.s expire at 11, so we'd have about a half hour of exposure. And we're going to look at setting up a volatility trade. So we're going to look at possibly both sides, and keeping in mind that you don't need to make both sides. This is a volatility trade where you're basically directionally biased, as in no direction, you're biased towards volatility is going to spike compared to the premium.
And you got a good number. We're at 66.
Right, so we have a bullish spread here that would go from 66 where we're at up to 67.50. We have a bearish spread with the same $1.50 just to the downside. All right, you'd be buying the bullish spread, you'd be selling the bearish spread. They're almost identical. The only difference is now we've ticked up about 3 pennies, so you have a few pennies of intrinsic value. So you're looking at about $41, $42, which represents 42 cents of movement in the underlying price of oil that you would need from 66 to become your break even. That's the 11 a.m.s, all right? Now, when we jump around to these, the 12s seem to be most attractive, in my opinion, and these are going to have the same exact price point, which is nice, okay? So we're dealing with the same exact prices.
The extra hour,
only difference is an hour, which is really cool because we get to look at the price, and there's no other variable that's different. So whatever the difference is in price, that's what that hour is costing you, right? And so look at the upside. Automatically, that extra hour is costing you a little bit much on there.
10 cents.
Yes. And on the downside, it's going to be somewhat similar. And as we're now 4 pennies above where we're at, so you're looking at about 45.
And we were 41.
We were 41.
That's interesting.
And that would make sense, as in, the bullish spread has ticked up a bit, and as we recalibrated, okay, we're jumping around here. But yeah, so you're looking at about 45, 46, and that's why I even said it before. It seems like if you're going to make this trade and you're looking for volatility, the market doesn't really charge you a lot of money for that extra hour because there's a lot of that premium that's priced into just the 10:30 number, because that's where you're going to get a lot of action, right? So it's interesting. But so that was our noon. Now it's interesting. We'll jump to the dailies. Now, these are the same exact price point as in 66. Now, there's a couple things different, though, as in you have till 2:30 now. Lots of extra time. But you also have $5 of exposure as opposed to the $1.50. So if you ever got a tremendous move in one way or the other, you have profit potential up to $5 from where we're at. Now, this is going to get a little pricey, though. And really, the premium is going to be for the time, most of it. They're not really charging you for the $5 because realistically, oil is not going to move more than $1.50 by 2:30, 99% of the time. I mean, that's where they're pricing. So you're paying for the time. And they're going to charge you a little bit, as you can see. We're going to get up. It's going to be almost $70, $65. All right, but you're paying, so the 11 a.m.s were like 41. The noons are about 45. You add an extra 2.5 hours on that till 2:30. paying about 65. And as we've seen, though, you get some volatility around 10:30 for sure. But, man, these oil markets have been rocking throughout the entire day, whether it's Wednesday on EIA day, whether it's API on Tuesday. There's always some action. So it's interesting. That would be our bullish spread. That would be a bearish spread. And again, if you're directionally biased,
it's laying right at it, which is pretty cool.
And that's, you know, if you're directionally biased, this is even a great opportunity. As in, you don't need to pay for any intrinsic value on the bullish or the bearish.
Right. You can figure it out after it comes out.
You just want to go bullish? Well, guess what? You can pay $33, which basically means your break even becomes 66, literally to the thousandth of a penny right now on the dot. Your break even becomes 66.33, and you have profit potential anywhere upwards. We just like looking at both sides because you don't need to pick a direction. You just need to pick whether you think the instrument's going to become, the underlying is going to become either more volatile or less volatile.
And most times you get movement.
And we got 3.5 minutes until those numbers come out.
Stay right there, folks. Tommy and I are going to be coming right back. And right now we have that oil contract is flat out 66 on the nose.
On the dot.
You got to love it.
We'll see where it is when we come back.
Stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, this is quite a twist.
We got quite a number. So we have inventories falling 4.1 million barrels. Expectation was not even close to that. Bloomberg user survey, to scroll down before we jump back to the chart, was a rise of 713. And to see how that is playing out, check out that jump. 65 cents automatically. Even if you were trading the 230s, you jump to a profitable position in the span of about 4 seconds as we proceed to trade higher.
That's pretty amazing.
So to again,
what a miss.
Yeah, and they've been big numbers across the board, it seems like, recently. But yeah, this, within the span of literally 4 seconds from that number coming out, oil jumps about 65, 70 cents. So all of your value would be in the bullish side of any trade you're making. So here's your bullish spread. This was the daily one.
Let's bring up the noon one.
Sure, yeah. So jumping back to the noon expirations, our bullish spread would have went from 66 to 67.50. There's your bullish spread. Pretty tight bid offer right around where the market is trading at.
Yeah.
And again, you can trade these out. You could close this out at any time. This trade was going to cost us about $45. Your break even would have been about $66.45. So automatically, you're able to lock in $70, putting up 45 for both sides of the trade. And just keeping in mind, if you ever got a huge turnaround, I'm not sure that's going to happen today with this type of action, but if it did trade below $66 before expiration, your bearish spread still remains active. Now, that's going to be pretty far on the money right now. You could get literally 1 penny for it if you wanted, or $1, in terms of what you're paying. But yeah, pretty big number, man. We'll check back in. Higher prices keep coming at us in those gas prices.
I'd really love to understand how you can get such a miss between the API and EIA, because that's a good one, right?
Definitely.
I believe that last night when I did the API, I believe it was a build. It was a small build, but I believe it was a build.
So to break down the full numbers here, now that's where there was, and you always get the median analyst estimate, right, which is the big number really, and then you have a Bloomberg survey. Having a Bloomberg terminal, you get to see a Bloomberg survey, which is pretty important to the market as well. So the median analyst estimate was a decline of 1.2. So the Bloomberg user survey was an increase of 700. So there was already some angst and wonder about where those usually aren't that separate.
Right.
But still blew it away in terms of a decline of 4.1 million barrels.
We're using oil now. I mean, all the way down. Even the distilled. Look at the distilled. They were looking for a build of 500,000 barrels, and they got a drawdown was 2.1 million barrels.
Yeah, definitely. Definitely. And that's, part
of
gasoline,
the same deal. Gasoline, they were looking for, a build of a million. A million. They got a drawdown of 2.2.
Yeah, big numbers across the board for sure. And that's what the next comment speaks to in terms of surprise draw. After API reported yesterday that inventories were likely going to rise. More than half of the decline came from the Midwest. And looks like every region, though, drew. So it's every region across the board. And, there's a glimpse of what that chart looks like, and we'll just check back one more time before we jump over. So pulling back a bit is in 65.60, and that's where you want to have quick fingers sometimes. That's a good trade in the span of what, a 10-minute trade, right? You put up $45 maybe for that noon. Yeah. You're able to sell it out at 70. That's per contract, of course, and because you can't complain. And as in, you can't complain when you get that to move that quickly, because you got to keep in mind that your profits are capped here at $67.50. So it's not like I'm just going to let this run maybe for $2. So you want to keep in mind with, is it worth risking a 30-cent pullback if you only have profit potential for another 70 cents to the upside?
That's right.
Right. Yeah. So we'll check back.
Pretty cool.
Check back. I'm sure we're going to see a little volatility for the rest of the day with that type of a number for sure.
877-927-6648. So that's the first leg of the market out here today. The next leg, of course, is going to be coming up to good old Fed Day.
And you had President Trump out there tweeting that he doesn't like high oil prices in OPEC. So I wonder if he's scrambling in his chair this morning as it continues to spike. But
yeah,
I think he's going to figure out quickly that one tweet doesn't move the price of oil as he wants it to. It might. But not when you have inventory numbers coming out, because that's actually where reality overrides rhetoric.
There's no doubt.
Yeah.
There's no doubt. Let's go take a look at that dollar index out here. So dollar index, this baby, continues to basically struggle right at this 93,480 mark. We got to 93,980. What's going to be pretty wild is watching that. Okay, is it going to be tomorrow? And the more I'm thinking about it, I can see it actually more so on the European Central Bank announcement because of the fact that the dollar index, 60% of the dollar index is the euro.
Yes.
So it's where the euro goes that, you know, if Draghi comes out and says that, hey, listen, man, we're going to just tighten down it all, you know, we're going to see some basically strength inside that euro. The thing that still blows my mind, so pitch it, you know, people say that markets are smart in general, and you know, you hear that, okay, the market has everything in it. Every time that I look at that and I hear that, I say to myself, well, how, you know, we had a one-day wonder with Italy, and, you know, one day it was the end of the world. The rates went from, in 3 days, it went from 1.7% to 3.1 in a 10-year. And I guess I guess now it's 2.8. I guess even when I'm walking myself through this, it's like, okay, well, now the rates did go up, and that's what they are, and the market said, okay, that's what they should have been anyway. But it still blows my mind that you get less money.
You get less interest on your money in Italy than you do here. Right.
That's pretty intense, man.
And that does have to do with some of the currency plays, for sure.
Well, in that case, now see, in that case, fundamentally, you'd be saying that the euro is stronger than the dollar because, you know, you put euros in. To get Italy bond, you have to buy it in euros. So if you bought it in euros and you're getting 2.8%, then, okay, the euro goes up and, you know, that's decent money. But you buy it in dollars, and it's like, why wouldn't you buy a U.S. bond? Because you don't have to, you're not dealing with a currency conversion.
Exactly.
You know?
Yeah.
So it's going to be a good one, man.
How about, as we were talking about, so it's Fed Day. We got the Fed coming up at 2. And I was pulling up. Let's just take a look at that yield curve.
Oh,
that's what we were talking about. So here's our yield curve, right? So you hear a lot of talk about the yield curve. Is it flattening? Is it steepening? And so when they're talking about the flattening versus steepening, what you want to, the points you want to focus on this graph are, here is your 2-year, okay? Where this is the duration of the loans along the right, along the bottom axis.
Yep.
And then you have the rate along the top axis. And so here's your 2-year. We're sitting at in between 2.5 and 2.6.
Yep.
Call it 2.55. Here's your 10-year, sitting at about 2.95. So there's your 40 basis point spread.
Yep.
Okay? And that's where, and the Fed's going to deal with some questions here, I anticipate, about this tightening of the spread.
Yes.
Because the last thing they want is an inverted yield curve.
Right.
Where you start having higher interest rates in the short term versus lower in the long term, which would indicate in terms of, you know, recession, no growth,
right.
You know. And so that's where this is tightened a little bit, and that's where they talk about it's flattening. And when it's flattening, you know, these are becoming closer to each other. It's going to become a flat spread. Be interesting to watch, man. Maybe you can pull this up as things rock this afternoon even.
Yeah.
Maybe I'll check it out during that 2 p.m. update as we see things hit. But really, 2 p.m. update isn't going to be too crazy. It's when they start digesting into those numbers, right? And the press conference and all that good fun.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow right now is up 7. Nasdaq up 4. 22. S&P's up 4.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow right now up 2, NASDAQ up 22, S&P's up 3.5, H&R Block. So what's going on with them?
I don't know. Let's dig into it. So first we'll pull up the chart, and they are getting hit down about 20% today. They came out with their earnings. Quite a number, man. You know, they closed yesterday at almost 30. They're trading at just under 24, down 569 for the day. Go for it. And, yeah, quite a number. And so they earned an adjusted $5.43 a share for the first quarter. Consensus estimate was $5.27. Okay. Read the numbers over here as you look at the chart. So they beat on earnings. They saw a revenue beat forecast. It raised its quarterly dividend by 4% to 25 cents a share, and then it says, however, the stock's coming down under pressure after issuing weaker than expected full-year revenue guidance and saying that profit margins could be as many as 500 basis points lower for the current fiscal year. Yeah. There you go. It's not what you did for me last 3 months. It's what are you going to do for me over the next 12 months and beyond.
And, you know, technically, this is kind of wild, man. I mean, you can see going back March of 2016, it came down hard, 33 to 26, 34 million, right? You make it back up with 32. You test with 21. You come back down again with 24. Yeah. And what we had just done, it looks to me like, so yesterday, this is a weekly, so 10 million versus 33. This thing's in tough shape now, man.
Yeah, and just fundamentally, I wonder how that plays out. There's so many things, you know, the tax business. My goodness, the amount of money that Americans spend on doing their taxes. Totally. It's a $5 billion company, even with a 20% hit. But yeah, I mean, look at no growth whatsoever since 2014. Right.
And it just might be easier to do your taxes this year.
That's, you know, and whether it's easier or whether maybe it's easier for competitors to get into their business. Yeah. That's where, you know, because H&R Block has an online service similar to TurboTax that they can compete. But guess what? There's a TurboTax. And there's other probably similar facets of that industry that are making it easier, and that's where margins probably going to suffer when you have competition. Easy access. You just need a platform on the web, and if you don't have sophisticated, you know, taxes of your own, where you know you just have whether it's a W-2 and a house and you have everything, that is so simple online.
You pop those numbers in, and
everything is, you know, you have your forms you need, everything's right there. And realistically, that's just, I mean, Amazon could be in that business tomorrow, right? I mean, that's kind of a technology, consumer-driven environment business where you just set up the website correctly, you make it easy as you can for consumers,
right,
and boom, you're competing.
And you're off a spreadsheet.
That's it, right? I mean, that's where, you know, you get some great programmers, you get some great developers that make it easy for consumers, and if you have the back-end support for technology, you can do it. And in this day and age, there's a lot of companies probably, if margins are too wide, they'll come into that business. And I don't know what they're like, but geez, that's saying.
You know, it seems like every 2 or 3 months, you get to hear a new ad on, you know, Bloomberg, CNBC, NBC, direct to consumer.
Yes.
You know, that, and it's
talking
all
about Bombas socks.
Totally, yes, all of that. Do you know
can
what I mean?
even sell socks through
socks, razors.
Yes.
I do Harry's now. I love it.
Hey, I've told you, I went to high school with the starter of Harry's. Jeff Rader is his name. Yeah, and kudos to him. And they're also, he was one of the creators of, founders of Warby Parker, that people might know, the glasses retailer.
Okay.
Huge online glasses, prescription glasses. Right. They have huge retail shops now as well. But that's an area, both, right? Glasses, prescription glasses. Talk about margins. They're gonna
talk about margins.
Good glasses online.
I went to go buy a pair of sunglasses last week. I couldn't do it.
Good for you. Yeah, they're huge.
Know, everything's so expensive.
No, and then the razor deal
and
as well.
It's a piece of plastic. It's like,
yeah, well, razors aren't. You know, that's right. But same deal. They're not might not be worth $30. I mean, I bought razors just last week at Publix, and even the kid was like, man, these things, you know, looking at them. And he goes, have you ever tried Harry's? Like, I have.
I won't go back.
Funny, man.
Harry's are so inexpensive, it blows my mind.
And they sell Harry's at Target, too. I mean, kudos to them getting in Target, man. That is quite a sales meeting when you try and get your product in Target, right?
It is.
And you get it in Target.
So check this out. This is pretty funny. Is that I bought them on Amazon, of course, right? I get them on Amazon, folks, and I open up the package, and it has the Target. Get the next one on Target. Yeah, $5 off.
There you go.
Isn't that wild?
They know the game, right?
So it's like, okay, so the next ones I'll buy on Target online.
Sure, right.
If you can do it with the coupon. I don't know if I got to be there in person, but I have the coupon.
No, you might be able to do it online, for sure. And that's where you see kind of the convergence of online and with like some type of a retail presence, right? I mean, even Amazon with
the thing was amazing is that I didn't buy them off Target on Amazon.
Sure.
You know, I bought them off some other store, though.
No.
But
just that Harry sees the benefit of being available for people that want to walk in and buy something.
Oh, totally.
Just like Amazon, even in their dominance of online, they still understand. They have Whole Foods, you know?
Oh, yeah.
And they're building those lockers, and they are okay with having a retail presence to help facilitate the online part of their business.
Yeah. It'll mesh. You can see that. You can see the deals meshing, man.
Definitely.
But the one click and go is totally where
I ordered some stuff on Amazon last night. Doesn't take it. I hadn't done it in a little while. I was cracking up. Just a few household, you know, same deal. Nothing crazy. I think it was, you know, a $30 order. And what's great is I actually had a $50 gift card in my Amazon account. I think I had maybe gotten that for my birthday or Christmas.
Oh, perfect.
So you just load it into your account. It's sitting there waiting.
Right.
First thing you order, doesn't get charged to your card. It's charged to your gift card, you know, all that stuff. So, yeah. It's even better when you don't have to pay for it.
Yeah, it is, man. It is. Let's go look at Amazon right now. Look at this thing just laying there.
Yeah.
Oh, and did you see? Let's talk Amazon. Seattle. You see what happened in Seattle?
Didn't take them long to repeal that worker tax.
So, and this was I thought it was a cool way of doing it too. What happened is that they had a tax that was going to tax any employees that does more than 20 million, right?
Well, yeah, and it was per employee tax on companies that were doing, you know, large companies in Seattle. The likes of Amazon and Starbucks are the two that jump out.
Right. And so what had happened, folks, the city council had voted overwhelmingly for it, right? And then the business community turned around and says, you know what, we're not going to basically sit here and basically have them pick our pockets. And they didn't go the route of, first they went the route of turning around and saying, trying to change the city council's mind before the fact.
Yes.
But once it was done, Bezos said, okay, guess what? We're going to have a referendum.
We're going to the people, yeah.
We're going to go to the people. And as soon as city council heard that, this is so unusual. They all changed.
Yeah.
Like, oh no, now they're gonna vote me out.
Yeah.
It's like, you know, it's pretty wild. Sometimes watching, you know, I can totally understand the aspect of, you know, you have cities, they accelerate dramatically. People have a hard time getting housing.
Yeah, I mean, that was because the money was supposed to raise like $50 million. It was supposed to help with homelessness and all that stuff, and they should still take care of that somehow.
No, and they should, and I can understand that.
Right.
But not just go after the people that actually made it happen, and that's what they did. Do you know what I mean?
Kind of an
it's
arbitrary
like those
number.
Politicians, they should have been doing that as it's going along.
Well, the tough part is it's an arbitrary number, right? You might not even be making profit.
Yeah,
and
that's even
you're
more
getting
intense.
taxed. That's where you know it's just a number. And Amazon in particular, they're the best at plowing their income back into innovation and growth, and you just start getting taxed on however many employees you have. You could see how that could hinder that. And yeah, I think they had raised something like $280,000 for that referendum already. And when I laughed, I said, raised? Who are they raising it from, right? As in they need to raise it? Who was giving them money to do that? As in they were going to do it no matter what.
Yeah. And stay right there, folks. Tommy and I coming right back. We have the Dow right now up 8, Nasdaq up 23, S&P's up 4. Coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow up 6, Nasdaq up 24, S&P's up 4. Let's go see where we're at with oil.
Let's check it out. So it's about 10:55. We're nearing the end of the 10 o'clock hour. And, yeah, that first spike seems to be the biggest one so far. We were up there at 66.70. Really, the spike high, 66.72. We've pulled back a solid 25 cents from that level, 66.46 currently. And, again, you had the 11 a.m. expirations, you have the noons, you have the 2:30s. No matter what you're looking at, we'll see where this plays out. But interesting nonetheless, and a little bit of a pullback. That's why it's never a bad idea to take profits profits when you get
totally.
them in the span of about 18 seconds after those numbers come out. We'll see where oil sets.
You know, if we go over, we're just looking at the, you know, the Madoff scandal. I guess it takes a long time. This is so 10 years later. If you saw this movie, folks, one of these funds that they always claim that they knew that it was a feeder fund, it was a monster fund, and they knew that you know, the thing was a scam.
Sure.
Well, he's just coming up with another $280 million.
So Ezra Merkin, he was one of the earliest, right? Merkin, who met Madoff in the 80s, ran so-called feeder funds, directed investor cash into Madoff's bogus investment firm. Some of the clients, including NYU, had no idea that's where their money was ending up. And the bankruptcy trustee claimed that Merkin turned a blind eye, and that's why they were going after him. And so he reserves claims against him in 2 funds, but I was getting down here. So the Merkin entities, which lost hundreds of millions of dollars, will get a belated claim in the bankruptcy case. So where's the part where he said they got tipped off? Where was, right, that... So here we go. Picard produced evidence showing, Merkin had been warned about Madoff as early as '92 by a money manager for 2 of the feeder funds. He told them the returns were too consistent. I mean, that's where it's just a shame that, you know, people knew across the board. And he was running the NASDAQ at the time.
Yeah. Yeah, right. Exactly. Oh, my God. That's
Seriously.
I shouldn't have forgot about that. Yeah. Stay right there, folks. Swim lessons coming up next. Have a great one. Have a safe one. 2 o'clock. Listen to Tommy's update.
There we go.
Thanks, pal.
Thanks, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.